Brian Wilson, Mary Catherine Ham, Brian Neiman, today's newsmakers, and you, the Morning Majority. 105.9 FM. AM 630. WMAL.
8:37 on the Morning Majority. Brian Wilson, Mary Catherine has today off. Larry Kudlow's on the line, host of the Kudlow Report, CNBC. You can check him out on the TV, 7 p.m. You can also hear him on the radio on 105.9 FM and AM 630 WMAL Saturday nights at 7 o'clock. Good morning, Larry.
Morning. Good morning.
Hey, before we get into numbers and stuff, I wanted to get your take. In New York, how much the Occupy Wall Street protest is having any impact whatsoever on the city itself as far as getting around and all?
Yeah. Well, it's screwing up downtown. I mean, as Bloomberg said, just screwing up, taking up space, and apparently it's a big stink pot. So, whatever their point is, they made it. It's time to go home. I agree with Ed Rendell.
Just saying,
go home. It's not for Eddie. Tea Party rallies, they had them, then they went home.
Right.
These guys got to learn a little. I don't know what it is. I mean, I still can't. I had one of the so-called leaders on. Now they're talking about stalking some rich people up on Fifth Avenue.
Oh.
That's the latest I heard, which I think is just union thuggery type tactics.
Which may even be illegal in some cases.
Well, it's okay by me. Just toss them in the pokey. I mean, I've pretty much had enough with this thing.
I wanted to get your take on you wrote a column about where the president stands when it comes to populism. Alan Greenspan made a comment in the Financial Times. I tend to agree with him, so I want to get your take on it. He says that fear is the big problem right now, and people and corporations they just don't want to spend, even though they have the money, and they're just stockpiling a lot of cash. And that's why I'm an optimist when it comes to this thing actually recovering, but it's going to have to wait till after the election. I wondered what you thought about Alan Greenspan saying, hey, fear is what the big problem is right now.
Well, it's not a brand new thought. I mean, there's a lot of worries about, you look at what Obama's doing with this new left-wing populist bashing the rich, bashing the banks, bashing bank profits, taxing millionaires. Actually, it's a tax that's going to apply from $200,000 all the way up. Is going to get us close to a 50% marginal tax rate. So you look at that stuff, and I think it's demoralizing. And that's a phrase that was used by Governor Christie in his Reagan Library speech 2 weeks ago, and I think it's even more apt as Obama has gone even more on the left-wing class warfare attack. So you hear that, and it's an anti-business, anti-wealth, anti-success kind of message. And you don't know what's coming down the pike. Is this stuff going to pass Congress? Well, I don't think they can pass these tax hikes, but who knows? And what else is coming? And are we ever going to get corporate tax relief, which we need? Are we going to have a tax holiday on foreign earnings, which we need? These are things you just don't know. And you got Obamacare staring you down the barrel of the gun in early 2013. So this stuff causes everybody to pull back. That's one big problem, and I link it to very bad anti-growth policies coming out of Washington, D.C., coming out of the White House. I don't think it's going to help Obama. I don't know what he thinks he's doing. I have no idea. This leftward stuff, this stuff doesn't sell. Come on. This stuff doesn't sell. He's going to lose a whole bunch of states come November 2012.
Let's talk about the Wall Street, the Dow, up 330 points yesterday, now standing at 11,433. I think the last time we talked, which is about a week ago, we were 800 points lower. Don't hold me to that number, but that's an approximation. That's pretty close.
It's actually, you're right. It's about 1,000 points from the bottom of last Monday. And so you're right. What's really interesting here, and very positive, the Europeans are taking strong steps to rescue this bank, Dexia, this Belgian-French bank, Dexia. Right. And I think it's a roadmap for rescuing other banks that may get in trouble, if and when Greece defaults, which I think is coming. So they're going to split up the banks, sell off the bad bank, nationalize parts of the bank if they have to, guarantee deposits and liabilities in the meantime. I think there's like a 10-year guarantee of all their liabilities. These are effective steps, to stop the systemic contagion, which could be catastrophic. These are very constructive steps, and even though we don't have a grand design yet, that's probably coming in a couple of weeks. It's the first signal that the Europeans have a roadmap to save the banks. And I think that's very positive. Ultimately, the banks are going to have to go and recapitalize, and there'll probably be some kind of EFSF TARP action. But this was very positive, and you can see how the how the stock market reacted to it.
So my question is, with the European crisis sort of nullified and not a part of the equation.
Well, lessened.
Lessened. Okay. What happens to our economy? Does it go through a spurt?
At the margin, it's just better because the financial stress in the funding markets and the bond markets will be less. That's the linkage. And there's a lot of technical indicators like LIBOR and two-year swap spreads and things like that measure how banks are lending to one another and how they're lending to businesses, which is not great, but mostly how they're funding their own positions, and therefore will they be healthy. So that's good. I don't think it has a big bang effect on our economy. The biggest problem in our economy right now is no jobs and no income.
Mm-hmm.
That's the biggest problem. The job numbers last Friday were a little better than expected, but, not very good, not enough jobs. And Americans' incomes are almost flat. In fact, in real terms, after inflation, they're negative. That's the real problem right now. And we're just not creating jobs. We're not creating new businesses.
The most amazing stat I heard, Steve Moore brought this on our program yesterday. I guess it's been out there for a couple of days. In September of '83, the same time for Ronald Reagan's tenure compared to Obama's, 1.1 million jobs created in September, the month of September of 1983. That is
it's a really cool stat. It's exactly right, and it shows you if you limit government and lower tax rates to provide incentives, if you deregulate the way Reagan did on oil, good things will happen. You're opening up the economy. What they're doing now is closing the economy with these tax hike threats and a regulatory overhang, which Obama made fun of last week. He said, Republicans want to get rid of all regulations. No, we don't. Which is Republicans do want to open up the regulatory obstacles, stop the energy business, which could probably create 1 million new jobs a year, and so forth. So these are things holding the economy back, and I'm not very optimistic about that. I don't see any big growth spurt here. The European story could, if they follow through, take away a big catastrophic negative. I mean, you don't want a Lehman 2008 event. That's always been the issue up on Wall Street. But I really liked how they handled Dexia. And I would guess, just a hunch, the European Fed, the ECB, is going to do some quantitative easing and interest rate cutting. And you know what? We haven't heard the last from Ben Bernanke on that either. I'm looking for more QE. I think it's a last gasp. It hasn't worked, but I think he's going to give it another shot.
All right, Larry. Great to talk to you as always.